Hello, everybody. Dr. Cherry here. Hope all is well with you. There are not too many certainties in life, but we do have one of them, and none of us like it: paying taxes. All right. So, what can you do to help you alleviate your taxes rather than avoid, and help your tax planning become accommodative and accelerating your personal finances? Well, you can use the Internal Revenue Code, whether you're a W-2 employee or a business owner. Now, the Internal Revenue Code, the IRC, is full of suggestions, nudges, incentives in order to shape our behavior. So as individuals, we can make better decisions about our money. And also, it's a public good because the government wants individuals to be better prepared so they don't have to foot the bill. All right. And it doesn't matter whether you're a W-2 or a business employee, there are a lot of strategies that you can take advantage for your tax planning. Okay, let's talk about bonuses or equity compensation. People are paid through compensation, through salary, or given some equity. Equity compensation is very difficult. It has things like AMT, alternative minimum tax, or if you exercise at the wrong time during the year, you may be footing a large tax bill at the end of the year, totally unexpected. And what about getting equity compensation in your employer stock and being overly concentrated in your company stock? A lot of risk there. What about diversifying some of that away? Number two, how about housing transfer? We make our purchases for our initial home. Historically, they accelerate in value over time or appreciate in value over time. And you can use some of that money to transfer to your next home, your second home, whether you're upsizing for a family or downsizing before retirement. Number three, S Corps and LLCs. Well, when we start our businesses, we start out with LLCs most of the time. They're still good. Well, what about those S Corps where you can minimize your payroll tax that you pay yourself, and maybe hiring your spouse in order to increase your efficiency on your cash flow to your home? Oh my goodness. And what about diversifying all those accounts that we hear about, whether it be IRAs, your employer sponsored account, your taxable brokerage? What does this all mean to you? You've heard terms like Roth IRA, traditional IRA, 401k, Roth 401k. You've even heard of strategies like backdoor Roth. Well, if you diversify across all of these tax advantage accounts, whether at your employer or outside of your employer, you can diversify how your taxes are being paid up front, tax deferred in the middle, meaning your investments are growing tax deferred, and how they are taxed at distribution. Some of your accounts, they can be taxed as ordinary income tax at disbursement, but it's a trade-off there. You've had all this tax deferral and you received a tax benefit up front, talking about your days at your job or your traditional IRAs. Well, the trade-off is that you have to pay ordinary income tax on that. I'll take that trade sometimes. Roth IRAs, you have to pay after tax on your contributions and then at disbursement tax-free. You do not know what the tax rates are going to be in the future. Nobody does. If we knew, we'd all be investing in the same thing. Diversify those accounts. All right. What about maxing out your retirement plans? Whether it be your solo 401k as a business owner, your employee-based 401k as a comprehensive business 401k plan. What about your health savings account, maxing those out? Maybe your 401k plans as an individual. You're trying to alleviate the burden of your annual federal income tax here. Again, so many suggestions, nudges, incentives in your tax planning to help you accommodate and accelerate your personal finances. All right, that's what I got for you. Cheers.